Can you believe that Bitcoin, a virtual currency born from the digital universe, went from being worth less than $1 to thousands in just a decade? From being used to purchase a pair of pizzas, a real story indeed, to reaching astronomical values, Bitcoin has reshaped our financial landscape. Such an extraordinary growth trajectory. No wonder that everyone desires a slice of the Bitcoin pie. But how do you get a piece of this pie? Well, there are several strategies you could use. Firstly, let's talk about hodling. This term, born from a typo in a Bitcoin forum, has come to mean long-term holding. Essentially, it's the buy and hold strategy where you purchase Bitcoin and hold onto it for a long period, regardless of price fluctuations. This approach is simple and requires less time and effort than other strategies. However, it also means you're exposed to the volatility of Bitcoin's price, which can swing wildly in a short time. Next up is dollar cost averaging, or DCA. This strategy involves investing a fixed amount of money in Bitcoin at regular intervals, regardless of its price. The goal here is to spread the purchase over time, reducing the impact of short-term price volatility. It's a more systematic approach and can be a good fit for those who prefer consistency and can commit to a regular investment schedule. But remember, while DCA can potentially minimize risks, it doesn't guarantee profits. Lastly, we have trading. This is a more active approach where you buy and sell Bitcoin to capitalize on its short-term price fluctuations. Traders use various analysis methods to predict price movements and make buying or selling decisions. It can be exciting and potentially profitable if you get it right. However, trading requires a good understanding of the market and can be risky, especially for beginners. It also requires more time and effort than the other strategies. Before we wrap up, let's talk about diversification. This is not a standalone strategy, but rather a principle that can be applied to any strategy. It involves spreading your investments across different assets to reduce risk. In the context of Bitcoin, it could mean investing in other cryptocurrencies or traditional assets like stocks or bonds. Clearly, each strategy has its merits and drawbacks. Your choice depends on your financial goals, risk tolerance, and investment knowledge. So, how do you choose the right Bitcoin investment strategy? Well, that's the million-dollar question, isn't it? And before we go any further, don't forget to smash that like button if you're finding this video helpful. So let's break it down. Firstly, it's important to understand that every investment strategy comes with its own benefits and risks. The key to choosing the right strategy is aligning it with your individual financial goals. Are you looking for quick returns, or are you in it for the long haul? Your investment timeline can greatly influence the strategy you choose. Next, consider your risk tolerance. Investing in Bitcoin can be a roller coaster ride. It's not for the faint-hearted. If you are someone who can't stomach the ups and downs, long-term holding or dollar cost averaging might be more your style. On the other hand, if you thrive on the thrill of the market, trading could be your game. Of course, none of this is possible without a good understanding of the market. Knowledge is power, as they say. So make sure you do your homework. Read up on market trends, understand how Bitcoin works, and stay updated on news that could affect its price. And last but not least, consider seeking advice from financial advisors. They can provide you with valuable insights and help you navigate the complex world of investing. Remember, this is your investment journey. There's no one-size-fits-all strategy. It's about finding what for you. Choosing the right investment strategy is crucial to your success in the Bitcoin market. So take your time, do your research, and make informed decisions. Now that you know the different Bitcoin investment strategies, it's time to take the first step. The world of Bitcoin investment is at your fingertips, ripe with potential. The key is to start small. Begin with an amount that you're comfortable with, then gradually expand your portfolio as you gain more confidence and understanding. Continuous learning is vital to your success. Stay abreast of market trends, understand the factors influencing the price of Bitcoin, and keep refining your strategy. Patience is your best friend in this journey. Rome wasn't built in a day, and neither will your Bitcoin fortune. Bear in mind, with great potential returns come significant risks. Bitcoin's value can be volatile, and it's essential to be prepared for this. Always ensure financial safety by only investing what you can afford to lose. Investing in Bitcoin could be your gateway to financial freedom, but remember, only invest what you can afford to lose. Happy investing. And that's a wrap. We've covered the basics of Bitcoin investment, from understanding its unstoppable growth to different strategies, making the right choice, and taking the first step. Remember, the world of Bitcoin is a marathon, not a sprint. Take your time, make informed decisions, and never stop learning. If you found this video helpful and want to stay updated with more investment strategies, don't forget to hit that subscribe button. Also, feel free to share this video with your friends who might be interested in investing in Bitcoin. We'll be back with more informative content, so stay tuned. Until next time, remember, only invest what you can afford to lose. Happy investing.